Introduction. Because of the permissionless and low-cost nature of the blockchain, new cryptocurrencies are being launched every single day. CoinGecko, one of the industry's leading crypto data aggregators, is currently tracking over 11,600 cryptocurrencies across nearly 700 exchanges. Meanwhile, crypto sites that track lesser-known or indie crypto tokens, such as Token Sniffer, highlight that there are over 2 million cryptocurrencies in existence. From novice enthusiasts to seasoned financial market participants, deciding which cryptocurrency project to invest in and assessing the project's quality are two skills that are absolutely essential to have if you want any shot of success trading or investing into crypto. Today's video will showcase why proper media and white paper analysis will help you avoid investing into bad crypto projects using the Direct Property Africa token, or DPAT, as an example. Media versus the black and white. New investors of a crypto project will come across the project's community via Reddit, Instagram, YouTube, Twitter, Discord, and potentially many other media channels. With so many sources of information, and with so many people having their own experiences and their respective hopes and opinions on a project, trusting any information from these sources must be done so with extreme caution. Because I came into crypto in May of 2020, I had a few months to understand the space before the mainstream came along during the 2021 bull run. With almost 3 years of crypto experience and nearly 7 years of overall investing and trading experience, I've seen many instances where retail investors and traders don't do their due diligence, then end up with a dissatisfactory experience with the markets. Focusing our attention to the DPA token, I was nearly fooled by the headlines of a blog post written about the project. If it weren't for 1. My prior knowledge of Acoin, the seemingly failed African cryptocurrency from the celebrity Akon, and 2. Subsequently, my analysis of the official DPAT whitepaper, I could have easily been duped into supporting the project. My tone might seem harsh, but I've learned a thing or two from believing the hype of the media and retail investors versus observing actual token performance. Examples of coins that were once upon a time very much so part of the conversation, but today they're nowhere to be heard of include, but by no means is limited to Everipedia, EOS, Efinity, Bitcoin Cash, Neo, Kusama, Bitcoin SV, SushiSwap, Digibyte BitClout, Smooth Love Potion, Alien Worlds, etc. DPAT in the media. The first time I got introduced to the DPAT project was when I was checking crypto news on my regular websites and I came across this article on Bitcoin.com, published about 2 months ago on February 14th. It's important to mention that this article is a press release, which means these words come directly from the Direct Property Africa token PR team, and not from Bitcoin.com in fundamental analysis, which is what we are doing with white paper analysis. One important component to assess is the geoeconomics of the African continent, which might not be known to retail investors. So before we go into the article, I'll quickly provide some context. Africa is often dubbed the future China. This is because its population trends and current economic prosperity remind some analysts of China in the 70s and 80s before they had their large spike into economic dominance. The next China or not, the crypto sentiment towards African usage of cryptocurrencies is quite high. From true crypto-savvy people, I'd say the sentiment towards African crypto adoption is at an 85 out of 100 as a bullish rating. The only reason it's not 100 out of 100, in my opinion, is because of the utter extreme severity of poverty, lack of physical and financial infrastructure, and presence of war and warlords. The potential for crypto adoption in poverty-stricken Brazil and Indonesia isn't the exact same as in South Sudan and Somalia. With this context in mind, Africa-related crypto projects are huge. Cardano is known for its Africa projects, one of those being a lesser-known project called World Mobile Token, which is focused on internet infrastructure. You'll notice that because this token is not only Africa-focused, but it's run by actual Africans and not just foreigners in Africa, the tone of this article and the white paper will reflect this. With geoeconomic and crypto context out of the way, I'll now dissect key parts of the DPAT article. I will link this article for you to read yourself, but for the interest of time, I'll pull quotes from the article and directly analyze them. I like to analyze media and white papers similar to how I used to do English papers back in high school. In a little moment, I'll give my current comments, and ask a question if applicable to extracted quotes that stood out to me. Afterwards, I'll have a log of my separate understandings of the DPAT project after reading media and official documentation that I can compare and contrast to find insights. Doing so in a sequentially relevant manner will highlight the progression of thought and analysis that might be new and interesting to those who are unfamiliar with this technique. Quote 104. For foreign investors who have always wanted to diversify their portfolio with African assets but have been held back by security and transparency, this might be a game changer. Comment 1. Note that this implies that foreign direct investment into Africa, through the DPAT project, will offer even higher security and transparency than what is currently available on the entire global market. Question 1. Does this include institutional investors or just retail? Wouldn't institutional investors with 7 to 10 digits plus of capital have more reputable African financial contacts than a brand new crypto project? In the world of the Belt and Road Initiative by China's CCP, how likely is DPAT to be a true game changer? Quote 2 of 4. Africa is a continent that is rich with potential and opportunity. However, due to prolonged periods of negative portrayals and limited access to resources or capital, it has not been able to maximize this potential. This has led to a lack of economic growth and development in many African countries. While many attempts have been made to address these issues, the lack of a secure and efficient alternative capital and fundraising market has resulted in further economic stagnation. This is where cryptocurrency, blockchain technology, and the recently launched DPA token, DPAT, come into play. Comment 2. This is the boosting up Africa trick I was referring to. This is the equivalent of, the industry is $100 billion large, if we only take a small chunk of that we could, rhetoric which is quite common in beginner entrepreneurial business plans and pitches. Question 2. Because the text specifically mentions the following 2 lines, is DPAT implying that their crypto project can, not only stop, but also reverse centuries of racism and economic exploitations to better facilitate African foreign direct investment? While not technically impossible, it's quite the claim to make and would require extensive rationale. Quote 3 of 4. In addition to acting as a dependable store of value and efficient global money transfer tool, cryptocurrencies have developed into premier investing devices. Thus, DPA token, DPAT, has been designed to give retail investors the opportunity to participate in African land ventures. For both real estate developers and crypto holders alike, this project unlocks untapped potential that can't be found anywhere else. Comment 3. The terms store of value and money transfer tool are outdated crypto fluff phrases. Each and every single token can technically store value, as value is personally defined according to the Austrian economics principle of subjectivism, and can be sent from one wallet to another. My personal advice is to absolutely never allow a crypto project to swoon you over with such words. Because over 99.99% of cryptocurrencies allow you to transfer your digital asset, except for tokens that are honeypots or soulbound NFTs, and because value is determined on an individual basis, the extreme applicability of the terms store of value and money transfer tool makes their usage in propping up a crypto project's appeal essentially useless to knowledgeable investors. Question 3. Because these are fluff terms that crypto investors of even a few months can discern from, but the DPAT team paid Bitcoin.com $1,500 for this specific ad placement according to their website, there are 2 questions that come to mind. 1. What level of crypto investor, from 0 to 10, is this press release tailored towards? 2. How much respect is being put on the reader's crypto knowledge using such fluff words? No matter what the answers are, this is starting to feel like looking at a neon sign that has yet to be plugged in, that spells the word scam. Quote 4 of 4. In addition to acting as a dependable store of value and efficient global money transfer tool, cryptocurrencies have developed into premier investing devices. They grant retail investors with no background in the market access to profitable opportunities that used to be limited exclusively to renowned venture capitalists and accredited angel investors. Thus, DPA token, DPAT, has been designed to give retail investors the opportunity to participate in African land ventures. For both real estate developers and crypto holders alike, this project unlocks untapped potential that can't be found anywhere else. Forging the way forward, a team of property and blockchain aficionados fully Seed by Coinsalt launched Direct Property Africa to focus on upcoming real estate ventures across the continent. Investing in DPA token, DPAT, is a promising venture for advocates seeking to capitalize on Africa's growing land and property market in a transparent and safe way. Solid Proof finished the DPA token smart contract audit, freeing the team to concentrate on developing this cutting-edge Web3 native land and property investment and trading platform with a number of compelling characteristics like transparency and inclusion. Every single land investment will have its own non-fungible token, NFT, mirrored and fractionalized, offering low entry levels so more investors can participate. Comment 4. I have multiple comments for this quote. 1. This is the second section of crypto fluff words in this very short press release. 2. There's extreme vulnerability here. If DPAT's unique selling point is that it unlocks untapped potential, in the form of financial returns to both real estate developers and crypto holders alike, this statement then implies that DPAT is looking to compete with the yields of all of global real estate development and yields available elsewhere throughout the entirety of cryptocurrency. This quote is slick because a novice investor would read the untapped potential portion and assume that's in reference to there being no other African projects doing what DPAT is doing. The more seasoned investor would understand that this phrase means nothing because all investments have the opportunity cost of the associating funds not being used in potentially higher yielding financial vehicles, real estate development and other crypto projects in this example, and very specifically the safety of investment collateral during the duration of the investment. The very reason why there's no foreign direct investment into South Sudan is because investment safety is on par with personal safety in said regions. DPAT is the digital plus blockchain plus cryptocurrency plus microeconomic version of this concept. 3. Juxtaposing the implied unique benefit that DPAT offers retail crypto investors with the legal and financial requirements needed to become a venture capitalist and an accredited angel investor is misleading to the inexperienced ears. According to the press release, the main incentive for retail crypto investors to place funds with DPAT specifically is due to the advantages that blockchain technology and cryptocurrencies offer, which is extremely vague and not at all project specific. If this is the case, the press release implies DPAT has virtually no competitive edge over any potential crypto competitors who are also in Africa. The press release's tone implies the perspective of DPAT to foreign investors, with no mention of attracting other Africans to invest, nor how tokenizing African real estate via NFTs is somehow proprietary to them. This is vitally important because, what's stopping their target audience of potential investors from jumping ship from DPAT to another African token, before or after financially committing to the project, which ultimately means long-term token price bearishness? 4. Just like how DPAT tried to justify its monetary value proposition using the prospective value of real estate across the entire continent, again, they tried to piggyback the credibility of two, most likely, completely independent organizations referring to mentions of staff being fully KYC'd and the phrase smart contract audit. 5. More crypto fluff and dramatic phrasing with the following lines: dependable store of value, efficient global money transfer tool. This project unlocks untapped potential that can't be found anywhere else. Forging the way forward, blockchain aficionados, fully KYC'd. 6. To anyone who's over a 4.5 out of 10 in crypto knowledge, they'd understand that having a smart contract audit prohibits honeypots and token taxes, amongst other benefits, when either buying or selling. This is done by examining the code written that forms all cryptocurrencies. An audit, especially by a credible auditing firm, serves as a quasi-gold star as governmental regulatory bodies haven't caught up to most of crypto, so in this aspect DPAT isn't wrong to mention this. The way DPAT is wrong is that having a smart contract audit doesn't prevent the foundation's team from dumping their tokens onto the open market at any point in the future. In other words, bringing up the smart contract audit is just a misdirection without ever bringing up any other potential abuses of the DPAT token. Question 4. No further questions for this section. DPAT whitepaper. The DPAT whitepaper echoes many of the same points as the press release, so for the interest of time, I will only be highlighting even more questionable passages from the DPAT Foundation. Quote 1 of 2. At the first stages of the project's development, we will hold 3 sales rounds and make it simple to buy our native token $DPAT directly on our platform with your chosen cryptocurrency. The funds raised will be used to implement a number of the core components of our ecosystem. We will cooperate with the largest exchanges, which provide huge exposure and opportunity for existing holders to trade safely and smoothly. To aid liquidity, holders can stake from 7 days to 250 days to receive rewards and passive income. Comment 1. This passage is committing one of the top cardinal sins within all of cryptocurrency, one that newbie investors most likely wouldn't be able to perceive. DPAT is most likely offering an unregistered security. All cryptocurrency investors must be aware that governmental bodies, such as the Security and Exchange Commission, the SEC, have jurisdiction over the sales of any and all financial assets that can be deemed a security using the Howey test, established in 1946. For an asset to be considered a security, the polar opposite of what a cryptocurrency wants to be, the asset must check off all 4 of the following criteria set by the Howey test. 1. Investment of money. 2. In a common enterprise. 3. With the expectation of profit. 4. By the efforts of others. DPAT checks off all 4 criteria with flying colors. The foundation team is asking for funds from the public to implement a number of core components of their ecosystem. In return for the investment funds, DPAT is offering the potential long-term profit of the African real estate, with short-term profit being staking rewards and thus, passive income. The SEC would immediately shut this project down in the United States, and almost certainly any other regulatory body in other jurisdictions. Question 1. DPAT brands itself as an African token, but subtly mentions it's based in Rwanda. Why has there been no mention about having multiple licenses for the different countries in which DPAT real estate would expand to? Quote 2 of 2. Part 1. DPA token has not independently verified all the information contained in this whitepaper, which has been taken from external sources. DPA token and its associates shall have no liabilities for representations, both expressed or implied, nor as to the reasonableness of any assumption contained herein or therein, and for all other written or oral communications transmitted to the reader. Part 2. The organization reserves the right, but is not obligated, to alter the information contained in this paper or in any other document prepared in respect of any prospective transaction relating to this paper accordingly, without notice to any recipient of this paper. Comment 2. Within the 2 months of me planning to do this video, this whitepaper has in fact changed at least once. for the disclaimer at the end to feature an admittance that the DPAT Foundation didn't even take the time to verify all of the information that willfully chose to put in their white paper, while still asking the public for investment funds and presenting the project as a potential lucrative opportunity as the reason why cryptocurrency has an overall bad reputation. To then say the foundation can at any time alter the white paper simply allows the foundation to erase anything potentially incriminating if they ever decide to rug pull. Question 2. I wonder how many DPAT investors have actually read through this entire white paper. DPAT conclusion. Thank you for watching to the end of this video. While legally we can't yet determine if the Direct Property Africa token is a scam, I believe it's definitely fair to at least say anybody investing into this token ought to proceed with extreme caution. And finally, I hope you enjoyed this analysis exercise. Even though it's lengthy, an extra 90 minutes worth of reading will save anybody hundreds and thousands of dollars in the long run from being misinformed about a project and its future prospects. Until next time, on Crypto Busters.